The current trading price for Strive Inc., NASDAQ ASST, is sitting at exactly $1.02, having closed the last session with a gain of roughly 3.57%. As of right now, the market is closed, but the after-hours chatter is deafening. You might be looking at this chart, hovering just above the $1 mark, and thinking this is just another penny stock clinging to life on the NASDAQ capital market. You see a flat line, a few jagged spikes, and a low share price that suggests a company on the brink of obscurity. That is the expectation. That is what the uninitiated see when they glance at the ticker ASST and perhaps remember it as Asset Entities, a small digital marketing firm for Discord communities. But the reality is drastically, violently different. The stock you are looking at is no longer just a social media marketing company. It has been transformed fundamentally and aggressively into what could be the most volatile, high-beta Bitcoin play of 2025. This isn't a marketing play anymore. This is a financial war chest. Strive Inc. has effectively executed a reverse merger strategy to become a Bitcoin treasury company, following the exact playbook written by MicroStrategy, but with a new, potentially more aggressive twist involving political heavyweight backing and a distinct corporate philosophy. If you think you are holding shares in a tech service provider, you are mistaken. You are holding a leveraged bet on the future of cryptocurrency, managed by a team that intends to utilize every cent of equity to stack Bitcoin on the balance sheet. The disconnect between the legacy perception of asset entities and the new reality of Strive Inc. is where the opportunity and the massive risk currently lives. Let's look at the immediate price action that brought us to $1.02. The recent 3.57% nudge upward isn't just random noise. It is a stabilization reflex following a massive news drop that the market is still trying to digest. Just hours ago, Strive Inc. announced a colossal $500 million at-the-market ATM offering for its Series A perpetual preferred stock, ticker SATA. To put this in perspective, look at the market cap of ASST. It's hovering under $1 billion in total valuation metrics when you factor in the new structure, but a $500 million raise is absolutely massive relative to the legacy float. This capital isn't for R&D. It isn't for hiring marketing managers. It is for one thing: acquiring Bitcoin. The market is currently wrestling with two opposing forces. On one side, you have the fear of dilution and the sheer weight of new paper hitting the market. On the other side, you have the infinite money glitch thesis, the idea that if Strive can raise cash by selling equity and immediately convert it into a hard asset like Bitcoin that appreciates faster than the cost of capital, the share price must eventually track the rising value of that Bitcoin, often with a premium. This is the tension that will define the next 6 months of your investment journey with ASST. You are not betting on earnings per share. You are not betting on revenue growth from Discord server management. You are betting on the Bitcoin per share metric. The company explicitly stated its goal is to maximize Bitcoin per share, a phrase that should ring bells if you followed Michael Saylor's strategy. But here is the contrarian take that you need to consider. Strive is entering this game at a different part of the cycle. While MicroStrategy started buying when Bitcoin was much cheaper, Strive is buying at near all-time highs, aggressively issuing preferred stock to do so. This adds a layer of leverage and risk that makes ASST significantly more explosive, both to the upside and the downside, than almost any other stock in the sector. Let's talk about the chart and the technicals, because the $1.02 level is critical. We are currently seeing a consolidation pattern that looks like a calm before the storm. The stock has support around the 0.90 to 0.95 range. Every time it dips below 0.95, volume spikes, indicating that buyers, likely those tracking the Bitcoin treasury thesis, are stepping in to accumulate cheap shares. Resistance is firmly stacked at 115 and 130. These are the levels where legacy bag holders from the asset entities days and short-term traders are looking to exit. To see a breakout, ASST needs to clear 115 with conviction, likely driven by a corresponding surge in Bitcoin spot price. If Bitcoin rips past 100,000 or 110,000, the correlation algorithms will force ASST higher, likely shattering that 130 ceiling and putting the $2 mark in focus. However, if Bitcoin corrects, the floor at 0.90 is fragile. Below that, we enter a price discovery mode that could flush the stock down to the 70 cents purely on panic. Now, pause for a second. I want to know where you stand on this pivot. It is rare to see a company completely abandon its old identity to become a crypto proxy so quickly. Comment below. Do you think Strive's strategy to issue $500 million in stock to buy Bitcoin at these levels is a genius masterstroke, or are they top-ticking the market and risking it all? I want to see your arguments in the comments. Are you a believer in the treasury model, or do you think this ends badly? We need to address the elephant in the room, short selling. With a pivot this aggressive, the short sellers are circling like sharks. When a company changes its business model overnight and starts diluting shareholders to buy a volatile asset, it attracts smart money skeptics who believe the valuation is unsustainable. Currently, short interest in ASST is something you must monitor daily. We are seeing elevated borrow fee rates. While they haven't hit the astronomical 100% levels of a full-blown squeeze yet, the borrow cost is ticking up, often fluctuating between 3 and 10% depending on the broker. This indicates that shares are becoming harder to locate. Why? Because a significant portion of the float is being locked up by long-term believers in the Bitcoin thesis who have turned off share lending, or by insiders associated with the Strive transition. Actionable insight for you. Watch the fail-to-deliver data. In stocks undergoing massive structural changes like this, FTDs often spike when market makers cannot locate shares to settle trades, due to the confusing nature of the new float and preferred shares. If you see FTDs spiking in the next bi-weekly report, it could signal a hidden liquidity crunch. Additionally, keep an eye on the spread between the common stock, ASST, and the preferred stock, SATA. Arbitrage traders might try to play the gap between the two, creating weird, unnatural selling pressure on the common stock. If you are long ASST, you need to be aware that sudden intraday drops might not be because of bad news, but because of arbitrage funds balancing their SATA ASST ratios. Do not panic sell into an arbitrage dip. Check the news, check Bitcoin's price. If Bitcoin is stable and ASST drops 5% in a minute, it's likely mechanical selling, not fundamental failure. Let's dig deeper into the Strive factor. This isn't just a random management team. The name Strive comes from Strive Enterprises, co-founded by Vivek Ramaswamy. The brand was built on an anti-ESG platform, prioritizing shareholder value and unapologetic capitalism. By merging with asset entities and pivoting to Bitcoin, they are making a massive political and financial statement. They are betting that Bitcoin is the ultimate store of value, free from corporate censorship or ESG mandates. This narrative attracts a very specific, very loyal retail investor base. We are seeing intense discussions on platforms like X, formerly Twitter, and Truth Social, where the Strive ticker is being hailed as a way to vote with your wallet. This sentiment acts as a floor for the stock price. Unlike a faceless corporation, Strive has a legion of ideological supporters who may refuse to sell even if the price drops, creating a diamond hand dynamic that frustrates short sellers. However, we must look at the legacy business briefly to understand what was left behind. Asset Entities Inc. was, until recently, a company focused on Gen Z marketing, specifically on Discord and TikTok. They managed servers, ran influencer campaigns, and developed the ternary payment suite. While that business generated some revenue, it was low margin and difficult to scale rapidly. The financials were unimpressive, with consistent cash burn and a sub-$1 stock that threatened delisting. The merger with Strive was, in essence, a rescue mission that repurposed the public listing shell. The legacy revenue from the Discord business is now almost irrelevant to the valuation. If you are analyzing ASST based on its price-to-sales ratio from digital marketing services, you are doing it wrong. You need to value it based on its net asset value of Bitcoin holdings, plus the premium the market assigns to its ability to raise future capital. Currently, Strive holds approximately 7,525 Bitcoins. Do the math. At a market price of roughly $100,000 per Bitcoin, using round numbers for simplicity, that is a treasury value of around $750 million. If the market cap of the stock drifts significantly below the value of the Bitcoin it holds, the stock becomes a deep value buy, essentially buying discounted Bitcoin. If the market cap trades at 2x or 3x the Bitcoin holdings, it is trading at a premium, pricing in future accumulation. Right now, at $1.02, you need to calculate the NAV per share. If the premium gets too high, the stock is overheated. If it is flat or negative, it is a scream buy. This NAV tracking is your new daily homework if you own ASST. Let's shift to the future outlook. What happens next? The $500 million ATM program is the catalyst. Strive will likely sell these SATA preferred shares in tranches. Every time they announce a successful raise and a subsequent Bitcoin purchase, expect a press release. These press releases are your momentum triggers. The algorithm is simple. News of raise, dip on dilution fear, news of Bitcoin purchase, rip on